Hello. Welcome to another video from 10x Investor Education. So, in this video, I would like to talk about triple threat Fed policy. Why value financial energy stocks such as Berkshire Hathaway, Energy ETF XLE, Bank of America are skyrocketing, and whereas growth stocks and no P stocks are getting crushed. Rotation. I want to focus. A lot of people are get lost. So they have been still buying these no PE stocks and then averaging it out, thinking that the price went down a lot. I think sometimes that's a wrong strategy. So you have to, as the new year comes, you have to take time and readjust your portfolio. And especially like last year, financials and energy did the best, and this year exact things happening. But for this year, the interest rates are not like last year. It is going to go up for sure this year. Okay. Disclaimer, this is not an investment advice. This is purely for education purposes. Before buying any of the stocks, talk to a financial advisor. Okay. So just a few weeks back, and I think around 3 weeks back or 4 weeks back, I made two videos. So talking about best top stocks for 2022. So on top sectors for 2022. So the best top stock was Berkshire and Disney and Chevron, and the top sector were financials and energy. So if you have not seen those videos, I would request you to go and watch an idea of those videos and get an understanding. And as you progress through the first week and a lot of these Fed policies, remember, you cannot beat Fed. Fed is controlling the whole economy. Okay. So you cannot win against Fed. You have to follow what Fed is doing. So if you look at it for last couple of weeks, this week and this week. So based on that video, I told Berkshire is already up 7% in last 1 week, almost hitting high every day of the week, and it's breaking out. It already up close to 7% for the week, whereas S&P up down by 3%. So if you look at it, Berkshire is already up by 10% compared to S&P 500, and Bank of America is already hitting again 52-week high every day, is up already 10%, and XLE up almost 10.5%. So the energy stocks, I sold covered calls, almost getting sold out. If you take any energy, EPD, ET, or even Marathon, Exxon, Chevron, everything is up anywhere between 5 to 15% in a week. And barrel stock, energy price also going up. So what is happening? So in this video, I would like to talk about what is causing this phenomenon, and then how long this will continue. And these growth stocks are dead for short term. So let me talk about it. So Wednesday, market got a chance to look at Fed meeting from December Fed meeting. Okay, so there were usually Fed does one by one. For last couple of 2 months almost, Fed has been surprising the market one after another. Nobody expected 3 or 4 rate hikes this year. That was first surprise, and Fed said we are reducing the bond purchases. Okay, so based on the meetings, it is not only actually Fed is thinking about decreasing the bond purchases, increasing the interest rates, but also reducing the Fed assets. Okay, so for last 10-15 years, the government has accumulated close to $9 trillion assets. So most of them are bonds and then mortgage-backed securities. So if you stop bond purchases, and if you increase interest rates, and if you actually start selling those assets, the effect of all three, known as triple threat, is basically interest rates are going to go up. So that is the reason. So what happens is so these hedge funds, they do not think not necessarily 5-10 years, right? So every year they have to perform. Okay, so you cannot say I'm going to underperform S&P or low performance this year because financials are not okay. So they have to rotate money and they have to perform or beat the S&P 500. Okay, so you and me are different, maybe managing few $1 million. So but these funds, they manage billions of dollars, so they can rotate. They have to sell like billions in days, and then you have to buy new assets. So do not think people are taking out money, selling it out, and putting in a cash. A rotation is happening. The main rotation happened is the reason because people made they made these hedge funds, or you and me, made close to 100% return on Google last year. Microsoft 50%. But the thing is, these financials and energy did a lot. But so what they're doing, because they know when interest rates goes up, they have to sell high PE stocks, the growth stocks, no PE stocks, and get back to safety, which is low PE stocks. So what they look at for is, first of all, low PE, the stock companies that are growing at a decent rate without paying high PE, and also huge cash flows, lot of money cash flows, companies having a high dividend growth, and companies buying dividend back. Okay, so if, for example, take an Upstart went down from $420 through $120. It lost $300. So if the stock is going down like that, where is the resistance? Who is going to buy the stock? Everybody is selling the stock to get into energy and financials. So there is no dividends, obviously. There is no buybacks. There is nothing to make resistance for the stock. So that's the reason why these growth stocks are free falling. Nobody wants to buy them, especially in these market situations. And I think some of these keep continue falling. So the idea is, hey, these have reached enough sell-off. Let's buy. Instead of that, think about your portfolio. Do you have enough energy, enough financials, enough value tech, enough low PE stocks for this year? Okay, so then should you diversify? Think about it carefully. The first week or 2 weeks of market gives you good signal how the rest of the year will be. And especially the Fed surprising with so many surprises in the last 3 months. Lot of surprises. Nobody expected Fed will move like this last 2 months. So people have been holding on to these growth stocks, and they have been selling off. Okay, so that is the market knee-jerk reaction. Market doesn't like surprises, and as soon as market saw the Fed meeting minutes, so started selling a huge sell-off Nasdaq, and almost 5 days market sold off. Okay, so the chairman Jerome Powell will speak next week during the confirmation hearing. He had a confirmation next week, and also Fed meeting from January 25th and 26th. So going to be very volatile again next couple of weeks, and he may strike a more dovish tone, basically saying cockish. Okay, so how they are going to control inflation? Okay, so all this is Fed doing because of inflation. So they have to control is uncontrollable right now. All the Federal, they have to control inflation. The only way to control inflation, that the weapons they have, is increase the interest rate, reduce the purchases, and sell off their assets. So which eventually, even though Fed doesn't want to increase the interest rate directly, the effect of it is going to be increasing the interest rates. So markets are surprised with the Fed meeting, and markets are going to be surprised when Jerome Powell talks next week. So that is the reason why the financials. So end of the day, whatever you do, there is no other way for market financials not to go up, because interest rates are going to go up. Okay, so for these reasons, the sell-off happened this week. It's more than a sell-off, rotation happened this week. So Berkshire, so the best stock for the year that I talked about 3 weeks back in my video, Berkshire, was unexpected. Nobody expected to go this much. It's already up close to 10% in last 3 weeks, close to 7% within this week. Almost on average, every day is going 1%. And if you look at S&P 500 and Berkshire, even though Berkshire 40% is Apple is still going down. People are rotating money into Berkshire. The reason is because S&P 500 Average PE is 26 or 25. Berkshire is 8.5. So S&P is 3 times more expensive than Berkshire. In a situation like this, people go to value, scale, and rotate into value stocks. So some years are value, at least some periods or some quarters are value, some periods are growth. Okay, so I don't think the financials and energy stocks have reached peak yet, even though the oil price went up close to $81. Okay, so that is the reason why the rotation happened strongly, and I strongly believe these two sectors, both energy and financials, are going to do good this year and next year. So I strongly encourage, look at your portfolio and see how much percentage of your portfolio is tied to these. Okay, so forget about clean energy, forget about, okay, EVs. I'm still having EVs. Okay, my one of the largest holding is Ford, and I still have Lucid. I keep continue. Those are long term. I'm not going to sell off those stocks. But after that, my heavy holding will be in energy and financials, which I have been buying recently this week and last week. So I keep buying, and next week the banks, next 2 weeks banks are going to do earnings. So keep an eye. The bank's prices can go down after the earnings. So you might get better prices compared to this week because they went up a lot this week. And I think probably, I'm not sure if they are overbought by this time and tech stocks are oversold. I don't think so. I think there is still huge sell-off going to come in tech stocks, continue for next couple of weeks, and then banks and financials will go up next couple of weeks. So as I said, look at your portfolio and try to balance if possible for coming this year and next year. This is the reason why the rotation happened in this week. Hopefully you understand what I'm trying to say. Okay, if you like the video, please click the like button and see you on my next video. Thank you.